Yo, what's up guys? It's your boy Looney, and today I wanted to go over two stocks because one of them actually surged while the other one fell, and I thought it'd be a good video to go over how I position myself and sort of react to contrasting moves with different stocks. And if you guys don't know by now, it is HIMS and SOFI. Both I own in my portfolio, and they sort of had opposite directions. And I'm going to break down why and actually what I'm doing with my own positions. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month where you get one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are down below. Now, I also want to do another shout out to Moo. It's running a really good offer where you get 8.1% APY on idle cash, as well as $1,000 of NVIDIA stock. And offer terms and conditions do apply. So again, down below. So let's start with HIMS and kind of go over why HIMS did so well today. And HIMS isn't a massive position in my portfolio. It's around 7%. I also own a leverage position of HIMS that I could show you after this, but you could see I'm still negative. And today on the day, it was up 7%. And that is because it announced an expansion into Canada and the acquisitions of two health tech firms, a blood collection tools provider and a digital health platform. And this could signal a big push into the international growth and expanded services. So the move actually gives HIMS a shot at capturing demand ahead of what Canada's semi-patent expires, because it has a patent that is expiring. The semi-glutide expires pretty soon, and that can mean a potential growth in the GLP-1s and just the weight loss market. And after this news, you could see that HIMS actually popped up around 8%. And this seems pretty good. This is good news. You can also read about it in Robinhood itself. They do sort of a deep dive, or they call it a digest of what's going on. And they sort of they go over what I was just kind of explaining. So they're showing some strength. And what I'm doing right now, I mean, I think the best move you can make is to invest when sort of there's a lot of fear, right? I'm looking at the VIX, I'm looking at different indicators, and with HIMS, this is a very volatile stock. So if you are okay with the volatility, you need to be comfortable then. You need to be comfortable with buying it at low prices. So me personally, I was buying it. I was mostly buying the leverage ETF of HIMS, and I'll show you that right now. And I wasn't buying the stock itself just because I was trying to do some option plays, and it seems to be working out. So I did a cash trade put, got assigned, and now I own the shares, and I'm doing a covered call. And if these do get called away, that's fine. I'm okay with that. Turn into cash and just hold the cash. But overall, I took advantage when the stock was showing oversold, and just like an overreaction to not only the stock, but just the market in general seemed to be very volatile and just like oversold. So I invested into HIMS. I believe in it long term, and we could see the benefits of doing that right now. It is up 8%. Now, if I didn't hold HIMS, would this be the time to buy? Yes and no. If I wanted to start buying, I wouldn't buy heavy, but it's still great, or I think it's a great stock to hold long term. So overall, there's not a bad time to buy. You can't time these things. You can't time the market, but overall, you don't want to be too aggressive, especially after a stock kind of runs up, because usually the stock ends up coming back and maybe people take profit, or it just breeds a little bit. So overall, if I were to buy or starting into this position, I would buy very lightly. And that's why I'm just simply holding, not really buying any more shares. Maybe if we do see a pullback, or we'll see. What I'll usually do is I'll sell a covered call, and with that premium I collect, if I'm still below or I'm still negative, then I'll use some of that premium to buy a share and lower my cost basis. So that's kind of how I've been handling it. That's why I have 104 shares instead of just 100. This way, if it does go near my strike price and I might get a chance of getting called away, I either roll it or I'll let it get called away, and then I'll still have those small shares, so I don't miss out too much on that opportunity cost. And who knows? Who knows actually where HIMS is going to go next? No one truly knows. But let's actually transition to SOFI and see why this stock fell, because this stock actually has been performing a lot better than HIMS, I would say, more recently. And today it had a massive drop down, almost 6%. In my portfolio, it's pretty big. It's 21% of my portfolio, and I have a leap call option. So it's definitely not a small position in my portfolio. And I am up pretty good. I mean, I'm up 146%. So this pullback isn't really affecting me, but it was a 4% drawdown. And the reason for this is because they announced a 1.5 billion public offering of shares, of common shares. So this just means that there's more supply coming, which is dilution risk, right? And that's for existing shareholders. So although this is not good news for shareholders, because when companies dilute shares, it actually lowers the value of existing equity. Even if the fundamentals of the business aren't badly hurt, many investors do treat this as a red flag. Now, me personally, I'm not panicking. Yes, this could be bad for the short term, but overall, who knows what they're doing with this cash? Maybe they're going to acquire another company or do something with it. You really don't know what they're doing with this cash, but I believe in this company. So overall, I'm not too concerned of what SoFi does day to day, right? This is a long-term play. Now, if I was doing day trading or day options, yes, I would be a little concerned, but overall, I'm in it for the long term. So in my point of view, this just means it's cheaper. My covered calls have some breathing room, maybe do some put credit spreads if it continues in this direction. But if I was new and I saw this sort of news or headline and I was new to investing, again, same sort of strategy. Would I buy heavy? No. But I think it's a great stock. I would do your own research, look at the fundamentals, look at its 10-year plan, and then from there, make a choice of what you want to put into it. And yeah, I'm sort of just going to wait for the dust to settle and see if the valuations recover and what the earnings are, because this is a great company. I think this is a great company long term, and it is still up 85% year to date. So overall, its performance has been doing really good. And again, you can read more about the news on SoFi, on Robinhood, and it kind of goes over this and some caution. So yes, bad news for SoFi holders, but overall, not too concerned. And I'm just going to emphasize that because that's what I'm doing in my portfolio. I'm holding my exposure to HIMS as well as SoFi. I am watching both. Maybe I'll scale back a little bit into one and scale in with one another. But all the moves that I made were from this past month. If you don't know, this past month have actually been pretty rough for the market and just for myself as well. And I'm finally recovering because I took advantage of the dips. I was buying the dips, either selling cash trade puts, buying shares, or even buying a leap call option. I was taking advantage of the fear and just the volatility. But overall, not heavy leverage, because that is where you can get destroyed. HIMS, you could see, I just wanted to stop. This is the leverage ETF. It is up pretty significant. I mean, I already went over this, but it is worth noting this is a short-term play, so this is sort of like a leverage play, and that's why I'm selling more aggressive on the cover calls, and I'm not too concerned if I get called away, whereas my HIMS actual position and SoFi position, I do want to hold these long-term. So I mentioned leverage position, but overall, I'm not using heavy leverage. I'm not going into margin. I'm not doing day trades. I'm not chasing quick flips. I'm just sticking with patience and just overall discipline. And that's what I want to kind of take away from this for investors, because markets shift. They shift fast. They go up, they go down. And the reasons behind those shifts do matter, whether it's good news, expansion, longer term opportunity with HIMS, or on the other hand, we have dilution, public offering, which is short-term pain and just higher risk. That's what we saw with SoFi. But if you treat every headline with the same urgency, you'll end up getting burned. Whereas instead, when you learn the catalysts, the real reasons, you can make a lot smarter moves. And that's exactly what I'm doing. Long-term outlook. Both these stocks I do view as long-term plays. Sure, I'm being cautious because the market seems to be getting pretty heated recently and might look to hold more cash. But overall, I do believe in these stocks for long-term. And if you found this breakdown helpful, drop a like, subscribe, and in the comments below, tell me what you're watching. And if you're buying, selling, or holding, and just let me know. I'll catch you next one. Peace.